広がる空と海、広がる可能性。目に見える景色も、ここで過ごす人の気持ちも晴れ渡る、澄み渡る。そんな街をここ東京芝浦から作っていこうと思うのです。まだ見ぬライフ&タイムデベロッパーへ。野村不動産グループ。
お兄が部活を始める。e スポーツというらしい。部活なんてって入る前は言ってたのに。
ごめんね。
俺今楽しいかも。
e スポーツを若者の可能性を広げる教育につなげます。
よし、みんなも来て。
山のばあちゃんは強い。一人の方が気楽なんだという。私は一人って怖いけど、大人になると怖いものなんてなくなるの？てか、ばあちゃんこっち住んじゃえばいいじゃん。
みんなが備えてくれてんから。
通信で培った経験とデジタルの力を生かし、地域防災を支えます。
おはよう。
おはよ
Okay, everyone, thank you once again for joining us here today at Sushi Tech Tokyo 2025. We will be resuming our program momentarily, so please be seated. Simultaneous interpretation is available for this session through your simultaneous interpretation headsets. Please be sure to use Channel 1 for Japanese and Channel 2 for English. Okay, everyone, thank you for your patience. It's now time to move on to our next session. それでは大変長らくお待たせいたしました。再開させていただきます。Just so you know, once again, a reminder, simultaneous interpretation will be available through your receivers. Please use Channel 1 for Japanese or Channel 2 for English. これからのセッションですけれども、引き続き、同時通訳のご視聴いただけます。チャンネル1は日本語、チャンネル2は英語となっておりますので、合わせてご使用ください。Okay, so without further ado, it's time to move on to our next session. This is on the theme of Japan through the eyes of global top-tier VCs. So I'd like to welcome our panelists to the stage. Let's give them a warm round of applause. まずは Andreessen Horowitz partner, Ms. Aya Stone. 皆様拍手でお迎えください。Next up, New Enterprise Associates NEA partner, LP Relations, Mr. Nick Klein. 皆様拍手どうぞ。And our session will be moderated by Mr. Nobuyuki Akimoto, AT Partners Incorporated co-founder and general partner. 皆様大きな拍手でお迎えください。So, Mr. Akimoto, if you're ready, I'll hand over the stage to you.
Yep. Hi, everyone. Thank you for joining us. I think you are probably hungry. I'm hungry too. And we had the last session in the morning, standing between you and lunch. But I promise you like this. Two great speakers from US have that great insight that they can share with you. So stick with us. So I would like to get started a brief self-introduction from each of you. Yeah, please go ahead.
Hello, hi, my name is Aya Stone. I'm the partner at the capital formation team at Andreessen Horowitz. So Andreessen Horowitz is one of the largest venture capital today in the world. We were founded by two entrepreneurs, Ben Horowitz, Mark Andreessen. Now we invest across the 6 different sectors of the software. So we are very excited to be here today because we have been spending a lot of time in Asia last couple of years. And so looking forward to discuss the future of the Japanese market opportunity with Nick and Aki. Thank you.
Nick?
Thank you, Akimoto-san. Hi, everyone. I'm Nick Klein. I'm a partner at NEA. We're a US-based venture capital firm. We've been around for almost 50 years now with a pretty broad mandate globally. We're tech investors and healthcare investors. And if you think about those two parts of the global economy, they're two of the most alpha-rich and alpha-generative parts of the economy for our limited partners, and it's quite exciting for our practice. You know, we've backed companies in our history like Workday, Salesforce, Databricks, others that are household names today, and we're quite excited about that. You know, we've been spending, like Aya and her team, quite a bit of time here in Japan looking at companies, and we're really excited to be here today and excited for this conversation.
Thank you. Although I'm the moderator of this panel, but let me briefly introduce myself. I'm Akimoto of AT Partners. AT Partners is a fund-of-fund investment firm focused on the investment activity in top-tier VC fund outside of Japan, including NEA. And we want to be the bridge between global level startups and the Japanese large corporation. Then I would like to get started first question. The first one is, how venture capital market evolved over the last few decades? How top-tier VC funds are adapting? That's my first question. You can start from Aya.
Yeah, sure. So if you look at over the decades of the US venture capital market, I would say it went through the significant evolution. And probably the two most key changes, one is the power of the software, and then second is the specialization. So if you think about the early 2000s, yes, software was there, but Mark Andreessen and Ben Horowitz, what they start seeing in the early 2000s was how software had become very pervasive technology. And so Mark Andreessen himself put the best in the editorial published in 2011. He named this editorial as "Software is Eating the World." So that was his prediction that software will restructure a lot of their sectors, starting from healthcare, education, national security, technically any industry in the world. And what that means is actually back then, if you think about the number of the startup company who accomplished about 100 million ARR, that is always sort of like the benchmark for the successful startup company, probably it was like 12, 15. But with that wave of software becoming much more pervasive with technology, they expected the number goes up to the hundreds. What does it mean for the venture capital then was naturally we need to be ready for address this larger market opportunity. So from the beginning, Mark and Ben, they built a company very differently from the peers back then. And they took the management fee of the firm and invested in the operations support team. So actually today, Andreessen Horowitz, we have about 350 people out of like 550 entire team who focusing on operations specialists who can provide all this support to those software company startup entrepreneurs. And for that, we needed to kind of reinvent how the venture capital should be. Even if you are the startup company who just started the business, we wanted to provide the support which large corporation can have. So the 350 people in our case, the function of the team include like talent development, marketing, go-to-market, government affairs. So having this large platform has become probably one of the significant change. The second is also specialization, because the software is now adapted in many different sectors, as I said, from the healthcare, blockchain, and you can imagine that talent who required in each segment a very different domain expert. And so at Andreessen Horowitz today, we have 6 dedicated sector team, and they have their own investment process. They have their own operation teams that enable those teams to be very agile to adapt to this evolution of the technology. So the scalability and the specialization is the way the market evolved the last decade or so. And probably, Andreessen took this approach, and NEA itself also has a very unique approach there too. So maybe hand over to the Nick.
Yeah, I think that was really well said. I mean, we, being almost 50 years old now as an organization, NEA has always been one of the mega funds in the US. If you go back to 1977 when our first fund was raised, it was a $12 million fund with an M. That was a huge fund at the time. And so we've always been a big believer in the power of scale in venture capital. And if you look today, as Andreessen has seen, there is so much value being created in private companies that we're able to stay with. We're able to back at a very early stage and then scale in additional capital over our investment horizon. So we think that there's been, over the last couple of years and really the last decade, kind of a bifurcation of the big scaled platforms like the two of us and a handful of others, and then kind of smaller, very focused, dedicated venture capital firms. And we believe that kind of returns and opportunity set is going to be bifurcated between those two groups. So much like Andreessen, we tend to surround our companies with a lot of resource from talent development, go-to-market strategy, technical advice, and I think that true global platform is what differentiates us today. I think the other thing I'd add is that we've been very consistent in our 2 core sectors of technology and healthcare over our history. There have been some funds that have come in and out of healthcare as an example, but today with the current AI wave, I think there's a really interesting opportunity at kind of the intersection of tech and healthcare where we're spending a lot of time. So I think just scale, specialization, and then also resource that we're surrounding our companies with is how we characterize it.
This is not the question about the venture capital market. But compared with before, my impression is that your LP base might be a little bit changing. For example, almost 20 years ago, when I was in Silicon Valley, I tried to make an investment in NEA. You guys turned me down. But recently, I guess two of you may have some kind of the strategic investor. If yes, do you have any specific team or organization or process or activity to support the strategic investor, like CVC or corporation?
Yeah, I can start with that one. I mean, Japan's not a new market for NEA from a business perspective. We've been fortunate to have LPs here for over 20 years. And I think things have evolved, to Akimoto-san's point, where there are interests from Japanese CVCs and corporates in the sectors where we're focused. And so we have partnered with several because I think if you look across our investment platform in software, in consumer, especially in healthcare, where Japan is facing many of the same challenges as the US, there are emerging technologies and companies that we're backing that could see a market here in Japan. So we try to, from an organizational and capital formation standpoint, have a very distinct strategy of having financial investors, having corporate strategic investors where we can kind of learn the market here from a business perspective, and then also government investors as well. I think the kind of combination of those three types of LPs really help our strategy here. And so to your question, Aki, yes, we've got a team that kind of interfaces with CVCs, understands where the pain points are within the organizations, and really tries to map that onto our areas of deep domain expertise in our platform to hopefully surface companies that could see an opportunity here.
That's great to hear. How about you?
Yeah, I totally echo Nick's sentiment. If you look at our investor base, naturally, still predominantly it's more financial return-oriented investor, but especially for the international market, actually new investor base include a lot of the strategic cooperation. And I believe what's underscoring this change is most likely for this AI technology. So today, we acknowledge a lot of the emerging talent from this side of the world. But when things come to the AI technology, especially the level of the talent who already productizes their technology into the service and the product, probably it's more coming from the United States. So those Japanese corporations are now aware those new technology are available in the United States, and they are much more interested in to partner with us. So we receive a lot of the inquiry and the incoming kind of approach from all the corporation. They want to see what types of the portfolio company we have, how they can help to adapt to their future business growth drivers. So, for example, from our perspective, there are some very positive changes in Japan as well. If you look at the Japanese market, historically the market was described as Galapagos, because a lot of the unique difference of the Japanese market actually made the US startup company to come into this market a little bit challenging, maybe represented by the two key challenges. One is localization, the other is the time. So the localization, as you can imagine, if you're a software company from the US coming to Japan, you have to translate in the Japanese language, but moreover, you have to do the configuration for the local product demands. And also the customer service demand are different, or the workflow are different. So it was quite a lot of the investment for those US startup company to come to this market. But I believe this AI technology is now slightly different. So first is language barrier, as you feel, almost, the language model diminish this cost of the translation. And then also a lot of the Japanese corporations start adapting this new way of how you work with a startup company. Next risk was the time. So the time is the enemy for any startup company. The operation is very lean by design. And so for them, which battle to win, to pick which battle you can win is very important. oftentimes, the Japanese corporation very keen to speak with them, had a great initial conversation. They're in the follow-up conversation for 3 months, 6 months, 2 years, and nothing happened.
Yeah.
And that was a lot of the case the software company from the US witnessed, and that was challenging for those companies to come in. But we're observing a very positive change there, the improvement there. Many of the large Japanese conglomerates, especially at very senior executive level, they are now willing to take a risk, the calculated risk, to adopt this AI technology. So for example, like we work very closely with NTT Docomo. They are the largest data infrastructure. They have the largest mobile network. We have been very productive in terms of our partnership. We directly engage with their most senior executive to showcase what could be the potential future for them adapting the AI technology. And then they have been very supportive of our portfolio company to come into the market. And we start seeing those changes happening to another Japanese large corporation as well. So those changes of the time and the localization burden naturally lower that entry barrier, and I think Japan become even more attractive market for many top startup company.
Right. All right. Next question is, you already briefly answered the next question, but I would like to ask you guys, how do you evaluate the Japanese market for your portfolio companies? Is it attractive, or is it big enough as a market for your portfolio company, or do you think it's going to be the kind of the gateway to the Asian market? I would like to hear your opinion.
Yeah, I think I would start with that one. So again, we talked about kind of this partnership model, right? We try to have corporate CVCs, other investors here to really build out a kind of we think, a mutually beneficial ecosystem, right? To understand where the desires are from the market. Obviously, Japan has a big enough GDP. Obviously, there are hungry customers here for our companies, but it's more, as I was saying, how do you actually get companies introduced to the right people at the organizations to, not have a process that would stretch out for too long. So I think it's about building that ecosystem, number one. And then, number two, a lot of our companies, do face some distraction risk, right? The US market tends to be the first market that they're focusing on. However, our role as venture capitalists in supporting companies is introducing them to folks like Aki and others in markets like Japan of look at this opportunity set outside of the US. And, I think a great example in our history is Salesforce.com. Salesforce, Japan is one of the biggest markets for Salesforce today, and that was a company that we backed at the growth stage. So we have history in introducing companies to the Japanese market. It's an attractive market, and I think, as I was mentioning earlier, many of the trends that an aging population, as an example, digital transformation, these are all the things where we're spending time on a day-to-day basis. So I think over time, we'll find opportunities, but it takes a while to find the right entry points to certain companies.
Yeah, well, I think Nick very well articulated also the challenging part here. But maybe just to, stepping back, when we talk about the Japanese market, majority of these Japanese top companies are already a global player. They have the asset outside of Japan. They have this big distribution power. So we hope to working with the Japanese corporation, not just unlocking the Japanese market, but also the other market, global market they are operating. So in that sense, I think Japanese corporation, it's very high potential partner for us. But in the meantime, Nick's point about we need to meet the right decision maker, which tend to take some time. You have to navigate all this large conglomerate organization, but we shouldn't give up just because of that.
All right.
So we both are very, very hopeful about the future partnership.
You have any good example that you got a success collaboration between your portfolio company and the Japanese large corporation? As you mentioned, it's really tricky or it's really difficult, but if you have any tips that you can share with us, that would be great.
I can do a quick one. So that I mentioned about NTT Docomo because like some of their collaborations already publicly released, so I can talk about it. And so, for example, that the case we worked together with NTT Docomo was a very clear synergy potential because they have the data infrastructure, they have a data network, mobile network, they have about 40 million subscribers in this country. But naturally, as I mentioned earlier, this needed to be, to some level, top-down decision for those companies to adapt. So we are very fortunate to partner with some of the local, I mean the Bay Area, NTT Docomo team. They could point out like who is the right decision maker we should talk to. And oftentimes, this like decision maker in the headquarters are very open for this like new technology. So that types of the very fast decision making process, and there also some sort of like a direct access to the top senior executive. I think that's kind of the success key here. And then one of the company called the 11 Labs, they're the text to voice model. It's a state-of-the-art top model. And then they had made a very strategic partnership with NTT Docomo thanks to all these the environments they created together. And again, there are so many other collaborations I'm not able to disclose some of the reasons because they are not publicly announced yet. But we see a lot of the changes are happening now.
All right.
Yeah.
Yeah, I mean, we're spending time on a regular basis. We've got a couple processes that are live right now. You think about, the healthcare industry here in Japan with an aging population, very much as we see in the U.S. Obviously, as I mentioned, software is kind of technology is permeating every industry, including healthcare. So one live example for us is, we essentially have an AI company that is optimizing nurse staffing, which is a very acute problem for some of our insurance LPs here in Japan. So, we basically have a pilot for a US-based AI technology company. Is this going to work in the Japanese market, as an example? So, we very much view it as, we could have test cases. If they work, obviously, then the corporates can become customers over time. But I think it's all about experimentation, and the good part is that many of the sectors where we're spending time are shared pain points across our two economies.
And then I just have a very quick follow-on here. One of the industry we are very excited about in Japan is actually the contents industry. So the Japanese government announced their strategic plan to expand their exporting this Japanese contents, manga, movie, like all this cultural contents. And generative AI are going to help a lot of that efforts because now generative AI can translate this Japanese movie and then or the mangas in a very low cost and much faster. And so that enables those contents companies to actually distribute this, their foreign language dubbed version to the internationally. And a lot of this, like a manga is such an asset in this country. And then so many generative AI technology now enabling those productive process of this manga as well. So we also have some conversation with the TV station, the movies, and then some of the publisher. And then those are like a very, very exciting area. We spend a lot of time too.
Thank you so much. Prior to moving on to the next question, I would like to ask the audience, please raise your hand from the startup. All right, thank you for waiting. From now on, the topic that we would like to discuss is for you guys. So the next question is, how do you evaluate the Japanese startup as your investment activity?
I could start. So as I mentioned, Japan, not a new market from a business perspective, but over the past 3 to 5 years, we've been spending a lot more time here looking at companies. We've made 2 investments so far in Japanese companies. You're going to hear from the CEO of one of them on the next panel, Sakana AI, which we're very excited about the prospects of that company. But Japan fundamentally, actually, let's take a step back. 50 years of experience at NEA, and we kind of have this mantra of crawl, walk, run. We're very strategic going into new markets. If you look at Europe, if you look at Israel, if you look at other places, historically, we've made small investments over time and then scaled in a big way over time. So we see a lot of those ingredients here in Japan today. A large enough market, a hungry customer base, as we've talked about, and number 3, and this is the important one, is really a talent shift. And that's what we've achieved, or that's what we've observed over the last 3 to 5 years really is college graduates and young talent are more drawn to startups. That's kind of a mindset shift that we've observed in this market. That's what we think about to be a leading indicator. You can look at number of unicorns as an example. That's a lagging indicator. So number one is talent. Number two, you think about kind of the capital base, the capital dynamics here. There's obviously a very large and dynamic early stage venture capital market here in Japan with a lot of firms. The challenge over time has been growth capital. So companies will raise a Series A, Series B, and then kind of not have enough growth capital. So there's been a handful of international venture capital firms like ours and others, and Andreessen and a handful of others, starting to look at the market. And so now there is growth capital available for companies that we think have global ambitions. And then finally, the government, as you can see with this great event, has been more forward-thinking in trying to foster this kind of innovation ecosystem, and there's grants and tax considerations and other government programs that are really trying to foster this innovation ecosystem. So I think you put all that together, it's really exciting for us. We've had 2 investments, as I mentioned. We've probably met 100 plus more companies, and we're just excited of what we're seeing and what can be.
Oh,
Yes, so just a caveat, so I lead the Andreessen Horowitz Asia ecosystem expansion, and the investment is led by our investment team. So with that, I could comment some of our views on the market and generally how we think about investment opportunities. And so I totally agree with Nick's comment. So as a top venture capital, our job is to find a top entrepreneur to support no matter what, where they live around the world. Historically, because essentially we are actually investing in the people. So we are investing in product, we are investing in the opportunity of the market, but essentially what we are doing is picking the right entrepreneur to support. And to do that, you typically need a very entrenched local market. So not just assessing those people by number on the paper, you need to know them, you need to know their track record, you need to know these people even before they start their business. And for example, if we talk about AI today, so majority of our investment today is related to the AI technology. So the top AI talents usually come from the large research institutions like Berkeley and Stanford and the MITs. And another cohort is usually come from this AI research lab of the Google, Microsoft, Meta. So usually we have very, very close relationship with those organizations. We have eyes on those potential talent who might start all this entrepreneurship. And naturally, that is how we capture this top talent to work together with us. So we believe that level of the deep entrenched network is required to make the very sound investment decision. And naturally, in the international market, it takes time for the company to build these types of local network. So we're in an early journey of doing this. We are very committed to expand our footprint in the international markets. But at this point, because we are more based in the US, a majority of the talent are coming from that US portfolio. But some of the elements in Japan makes Japan as very interesting and talent pool. For example, robotics is one of the areas we are very excited about. So actually in Japan, there are more universities than any other country who has this robotics department. And naturally, a lot of the research and the PhD who are well trained for robotics technology. And with now the AI technology enabling robots to perceive, basically you can hear, you can listen, and you can also think. That will bring the future to the robotics industry. And naturally, we are still researching the talent pool here, but those unique strengths Japan offers, definitely we are very keen to keep close to look at.
Yeah, I'm really glad to hear that you guys really appreciate the talent in Japan. But next question is that, Nick, you briefly mentioned about the lack of the growth capital in Japan. And I would like to ask about the question for skin and egg. in Japan, including government, would like to have more unicorn. And in order to have more unicorn, we believe more and more startups aims for going global in order to challenge the bigger size of the market. In order to challenge the global market, we need someone's help, which may be the top tier VC fund outside of Japan. On the other hand, from your perspective, the size of the exit of the Japanese startup may not fit into your criteria. So I call this chicken and egg problem for Japanese startup. Any opinion or any solution or?
It's an interesting dynamic, and I'll give you a bit of an anecdote. So, we've, as I mentioned, met with, 120 plus companies, and it's common to sit down and hear from a founder that we are going to take this company public in December of 2029. Very specific timeline. That does not happen in the US. Like, that would never even enter the first or second meeting. So I hear that for sure, but I also think that there's been a kind of a mindset shift. And these are the companies that, if you think about a screen that we're looking for, it's often entrepreneurs that have spent some time in the US. They kind of have the Silicon Valley ethos, the risk-taking mindset. They've done accelerator programs, or they've worked at Google or other companies in the US. So I think there's a mindset shift of starting a company in Japan, but looking to the broad global market. Obviously there's a large enough GDP here to support very large scale unicorns, but for the companies that we're looking at, they have to have global ambitions to support. We're investing today from a $6.5 billion fund, and so we're a scaled investor, and we need to have scaled outcomes.
How about you?
Yeah, so I think definitely the US market is much deep mother market for us today. And then when we talk about the unicorn, actually the unicorn scale is also really increasing rapidly. So for example, our portfolio company, the Databricks, is one of the market investment we made. We are the seed investor. We're together with their journey over 13 years. And now they're about $75 billion valuation, and they're still in private. So we are supporting this journey over decades now. So this is the types of the investment we are hoping to be part of. We're not just hitting the $1 billion, but thinking about 50 billion, 100 billion. So we need exactly this mindset of the entrepreneur who are not just aiming for $1 billion as their goal. They're much more aspirational. They're much more audacious to think about this future of their technology. So I think, naturally, the US market is much more conducive in terms of this risk-taking, the capital. So I see the gap still between the Japanese market and US market. So maybe one way those entrepreneurs can try is come to US market, try if they can do the business in the American market and see if that works. And that is also, telling them, telling entrepreneur, you should do that is actually not working. They should have have that aspiration. Yeah. So that types of this mindset shifts, I hope we start seeing more and more. Yeah. And I think it will take a little bit of time, but we are very hopeful that could happen.
So you already mentioned, for example, AI or robotics, but Nick, you have any specific area of, the sector, industry, or technology you're interested in Japan?
Yeah, I think today we're spending time on only technology companies, and they tend to align with kind of our US-based thesis. I think it's important to note that companies we're investing in Japan have to kind of pass the bar in the US as well. This has to be a world-class company, and for that reason, we're spending time on traditional vertical software companies, AI companies, obviously, some kind of advanced manufacturing companies. we're not spending so much time on capital-intensive style of investing. So that's kind of taken us away from some of the deep tech investments, which I know are very prevalent here in Japan. So I think it's companies that align with our core U.S. investment thesis that are going to have the best level of success.
Right. And
Yes.
other than AI, robotics, is there any other sector or technology you're interested in?
So naturally, the healthcare and then biotechnology, Japan has very strong research capability. As you see, the PSL coming out from Kyoto University, a lot of technology are there. I think what this Japanese local ecosystem in the healthcare and biotechnology are trying to address is how to make their research commercialized, how to make the drug from there. And then oftentimes the Japanese university, probably the research is very much their focus. Not many schools actually teach them to how to develop their drugs and how to actually pass the FDA testing. University in the US, often case, I went to MIT, I know the MIT biotech team actually has many of the class to actually teach about how to do the FDA trial design. So these little bit of the structural challenge here in terms of that how to make those researches commercialized will be something like the Japanese ecosystem need to address. But in the meantime, research talent is here.
Yeah.
So that's another sector we probably see that advantage of Japan.
And my understanding is that two of you do not have any office in Japan. How are you going to support your portfolio company in Japan? By the way, I'm really glad to hear that you already made several investments in Japan. That's great news. But how are you going to support them?
We need strong partners like you, Aki.
All right.
We're hoping you can lend us some office space. You always do when we come to visit. So, yeah, we don't have an office here today. As I was mentioning Europe earlier, we've been investing in Europe for probably 15 years and finally opened an office about 2 years ago. So it takes a long time. That's not to say that we'll never have an office in Japan. Again, it's building out the network of partners, the local investors, the CVCs, the other venture capital firms. We've really spent a lot of time fostering relationships with many of the funds here in Japan, which kind of puts together really a mutually beneficial ecosystem that's supporting both our companies and companies that we're investing in here in Japan. So that's kind of our model. It's this crawl, walk, run model for now. It's not to say that we'll never have an office when you stop lending us office space, but that's how we're approaching it.
All right. How about?
I think Nick is very, well summarized that the challenges and the reality here. But not just limited to Japan. This business is a partnership. So we partner with like large corporation, and they oftentimes have much more manpower, like much more resources. So that's how those startup company work together with the large corporation, and then we support their collaboration there. And so it's not limited to Japan that we have much less resources as a firm, but like more leveraging these bigger whales. And in Japan, we are very fortunate to met some of their very strong local partners, like could be the corporate, could be some of the association with the CBC, could be the government team. Like we work closely with, you mentioned about the government investors. So we work closely with the METI general team. They have a great support system as well. So I think, especially with this Prime Minister Kishida administration announced this 5-year startup project, and then I think how the government put the roadmap is making sense. For example, the visa now much easier for the entrepreneur to come to stay and start a business here because of visa. I think there are some more challenges for more the actual operation-wise. For example, opening a bank account is very challenging as a foreigner here. Renting apartment office is very challenging as a foreigner. So there are so many things have to be a little bit more smooth out. But in the meantime, I see that from the macro direction, Japan is ready for adopting more entrepreneur, ready to accept a lot of the talent from around the world. And then naturally, if that, the progress is, we might have a chance to be physically present here too.
So in that sense, you may have more strategic investor in near future?
Potentially.
Potentially?
Yeah. I mean, again, a lot of the strategic investors have set up offices in Silicon Valley who, I don't know if everyone knows, but we share basically a courtyard in Silicon Valley, so we're very close. We maintain close relationships.
Like when we met in Menlo Park, we would just like open that door.
You just open the door and
hi, Nick.
say hi.
So close.
But a lot of the Japanese CVCs have set up offices in Silicon Valley.
Yeah.
And we maintain relationships there. And so again, it's just back to this partnership model.
You think so too?
I think so. Yes, I think naturally I shouldn't like underestimate or like articulate the interest from the more traditional investor. Like all the reason we discussed, private equity, venture capital has become very attractive investment opportunities. So we naturally receive a lot of the interest from more traditional financial return-oriented investor. But as you mentioned, yes, there are so many strategic investors who also express the interest.
Yeah.
So we are very open for their interest. We are excited to see like what could be the potential collaboration with those investors.
And as you saw before, there are several startups here, and I would like to ask you to give them some kind of the good advice in order to get the investment from top tier VC fund outside of Japan. What they should do? What any detailed advice would be appreciated.
So we're both not on the investment team, so I'll start with that. But you know, what we've found helpful is, again, we've maintained really close relationships with a lot of the local venture capital funds here in Japan. And we often use that almost like a deal sourcing screen in some ways, where we kind of comb through portfolios. And again, our capital is most helpful at the growth stage, right? So it's companies that have achieved product market fit. They've got a team that's well built out. They've got a team that has, you know, some business fluency in English beyond, you know, the top couple of people in the organization. And so I think maintaining those relationships with the local VCs is important because that gets to us pretty systematically. And then, you know, having a big vision, big vision for a global company is important to get our attention. You'll see that the two investments that we've made already are, you know, truly global companies. They're trying to be global companies. And that's really important to us as well. And you know, I think just combining those things, again, we're new to this market. We've just been investing here for a couple years now. We're really enthused by what we're seeing. We're really enthused with the talent shift that we're observing in companies. So you know, we're here 5 or 6 times a year doing events, et cetera. So we look forward to kind of engaging with a lot of the community here.
And so I think it needs to be mutual dialogue. So while venture capital seek for the top talent,
Yep.
but all this top talent also has to seek for the venture capital to partner with. And the one way to do it is naturally we have so many opportunity to look outside of our home base, but we also open our door. So for example, at the Andreessen Horowitz, we have the 2 sector team, blockchain team and then games team. They have an incubation program, the accelerator program. So the door is open for anyone. We have this, each program have twice a year. So totally we have a 4 program going on. That is a very hands-on program. We have those teams, about 20 companies coming to our office, spend time with us for 2-3 months, and we will train them to how to build a top company, how we'll have the mindset of being the world's most audacious entrepreneur. And so we're also very, very, you know, proactive to find the talent, and then we hope to see more application from the Japanese entrepreneur community and challenge all this program in the US venture capital. And like, you know, naturally we have this robust ecosystem thanks to all this incubation program, accelerated program in the Bay Area, not just ours, but so many other companies doing that. So this is a whole ecosystem. The door is open for anyone who want to challenge the US market. That may be one of the areas we'd love to see more from the Japanese entrepreneur ecosystem.
I would just add, Aki, quickly that, you know, I would kind of focus, Andreessen has their own programs, as I was mentioning, but there are programs like Y Combinator or other kind of accelerators in the US, which I think kind of bridging this global vision, this Silicon Valley mindset, so if, to the extent there's opportunities for local companies to engage with US-based accelerators, I think that's really important as well to kind of foster that risk-taking mentality.
Thank you so much. I think what we heard today is very much encouraging for both corporate venture capital, and also startups. They are pretty much open for both of them. Let us go global, and we got a success for the future of Japan. Thank you so much.
All right, thank you very much. Ladies and gentlemen, one more big round of applause for our speakers. Ms. Aya Stone, Mr. Nick Klein, and of course, Mr. Nobuyuki Akimoto. Thank you very much. Arigatou gozaimashita. We will be moving on to our next session momentarily. Please remain seated. I'll be getting started in just a moment. Okay, so we're going to go ahead and get started with our next session right away. Just to remind you, simultaneous interpretation is available